And there you have it. The markets are officially closed on this Friday, October 3rd. Welcome, investors and traders. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. It seems as though investors believe that no news is good news. In other words, if there is a government shutdown, we're not going to have shocking economic news to push prices lower, at least not yet. And in fact, CNBC reported that the government shutdown is likely to cement additional Fed interest rate cuts. We'll see about that. But in the meantime, our upside targets have hit in the diamonds, IWM, QQQ, SPY. We still have a downside target in the Qs because I did a two-part forecast there. We'll get to that in a moment. But I do believe that this long shadow on top of this candle here for the diamonds is telling us that the sellers came in on the close and most likely taking profits after a pretty impressive week. Now, I do think we could go a little bit higher on Monday, possibly Tuesday, but I'm going to do a two-parter like I did in the Qs for the diamonds here. So my upside target is going to be 468.69. Then I think later next week we'll start to pull back to 465.47. Now, if you're a long-term investor, probably thinking these aren't long-term targets. Well, obviously not, because my audience is made up more of option traders and equity swing traders. So upside and downside targets like that give them nice boundaries to trade from. And if you're one of our members, you'll know that's exactly true. We have a very high percentage of targets hitting. And if you position yourself using options, or you could even use these targets for risk management, you could do a lot better over time. So again, upside target 468.69, then right back down. I think we're going to move back to that moving average to 465.47. Looking at IWM, like I said, we hit the upside target, but we gapped up. Very interesting, because the small cap index here is set up for what could be a possible evening star. A little bit different than the diamonds. So I'm not going to go up on IWN. I'm going to go right down and attempt to fill that gap and maybe go a little bit beyond to touch that 20-period moving average there. So downside target for IWM is 243. Looking at the Qs, I did a two-part forecast on that one. Upside target was hit. I'm keeping that downside target right near that moving average of 594.18 as we trade within these fan lines. This is fan line number 8. We have fan line number 7. Here's fan line number 6. So between 6 and 7, we have a broadening pattern there, and we could see that pull back to test that fan line for sure. So if you're not familiar with fan lines, go to our Technical Tuesday playlist, and I have a whole bunch of educational content there for you. You can learn about the candle patterns, shooting stars, hanging man, engulfing candles, you name it, we've got it there. And these are very short educational videos that I refer to as your weekly technical analysis vitamin. It doesn't take much time to look at those. You can even look at them on your smartphones. You don't need big computer screens or anything to really see what I'm looking at on the candle patterns. And hopefully that will help you out. Just like any of the other videos that we do, if you like and subscribe and comment, it will help the videos that we put out to get on the main menu. And of course, we will build more viewership from that. And the more people we have looking at the charts, the more accurate the signals are. It's not the first time I've said that, because I do teach through repetition. Many of you know that already. But if you have more people following a bearish signal and they're reacting simultaneously, or even a bullish signal, think about how meme trading works. You know, you get a popular site that puts out some targets on the market or an individual stock, and what happens sometimes within hours, those stocks are hitting those targets. And I'm not looking to manipulate the market in any way. We're just following the signals. This is more or less the heartbeat of the market, and we're keeping our finger on the pulse of that heartbeat, so to speak. So let's take a look at SPY. Now we have a target on the upside that was hit. Here we have a shooting star. Oscillators down below are starting to pivot. So I think the S&P through this ETF could pull back a little bit. And I can't really go much lower than that because if you look back in time here, we're in a very narrow trading channel. You see that? So if we pull back, there's a good chance we'll get a bounce off of that trend line right there, which might give some of our option traders a new entry point for long positions or positive delta positions. Now looking at the VIX, this is interesting because while the SPY was down only by a penny, the VIX is starting to show a rounding bottom. You could see that we have higher lows starting to come in here after this saucer pattern began to form. Now, years ago on CNBC, John Murphy was the chief technical analyst, and he would always talk about saucer bottoms and rounding bottoms, and that tends to be bullish. Now, remember, the VIX, for the most part, is inversely related to the S&P. So if we start to get higher levels on the VIX here, we're going to see lower levels in the S&P. Now, we have a lot of energy in the markets lately. Obviously, we're having some incredible trades. We'll talk more about the trade of the week this week, where we were up 200% in a trade that we did in Merck. And so all of that energy is still coming in on the buy side. But if you go back and check your history, you'll find that a lot of times in bubbles, you'll get what's called a blow-off top. These are major rallies right before major collapses in the market. Now, I'm not trying to put the kibosh on the long side of this market because, like I said, we're making good money in our positions because the majority of the positions we hold are bullish. But you got to take a look at what's going on overall, and you'll see that, again, going to SPX, we have fan lines here that are going vertical, and we have this pattern which is very similar to what we saw in the tech bubble leading up to the crash of 2000. So you have to be very, very careful. And as I mentioned to our members this week, you know, if I have a long-term downside perspective or bias in this market, I'm still trading long positions, but my long-term outlook is keeping me very defensive. So in other words, if I take a long position, I'm going to be forcing myself to take those profits. Otherwise, you're putting yourself in a position where you could turn a winner into a loser, and that's not what we're looking to do here. Before we get into the trade of the week, let me just mention the reasons why we got into this particular position. On September 30th, President Donald Trump announced his first deal to bring most favored nation pricing to American patients. So immediately that charged up the entire pharmaceutical sector, especially Pfizer, because that was the one that was in the headlines. You can see here on the daily chart what happened on the 30th. We just went on the launch pad and went vertical. Same thing for Johnson & Johnson. You could look at MCK, McKesson. That one went up not as much as Johnson & Johnson, and now we're starting to see a pullback due to profit taking in the sector. But our trade was in Merck, and I put out a time-sensitive publication to our members because it was during this day that we got long the $85 calls in January expiration. And here's what the trade looks like for the trade of the week. Again, on September 30th, a publication went out looking at the January $85 calls. At the time, they were trading for around $285. But as I was publishing this, the market was already moving. You could see my price that I originally published, but I put a trade blotter out noting that we may have to pay up for that, and we did, and we got in at $3. Now, as of today, those January $85 calls were trading $9, so that trade was up 200%. Now, remember, I use this for educational purposes. This trade is pretty much done. And so don't try to copy anything that we're doing here. I'm just showing you what the trade looked like on the charts so you can see what causes us to get in, what signals we're looking for to get out. So again, if you look at this candle right here, you can see that down below, we were getting a pivot right here with a higher high. So as soon as it broke out of this high right here, from the 29th. I'll magnify that for you. You can see that. That was a half signal. But as soon as it traded above that, it then immediately turned into a pivot point, at which time the publication went out. Down below, we already saw a buy signal on the stochastic, and on the 28th, we were already getting a buy signal on the CCI. So immediately stock went vertical, gapped up the very next day right here, you could see. And then what happened after that? Well, now you could see that we got spinning tops showing up, and spinning tops are signs of indecision, right? You have to really understand how important it is for you to understand what those spinning tops are, because when a spinning top shows up, like we see here, they usually show up at pivot points. Here's another spinning top right here. You can see how it pivoted, went up from B, pivoted down from C, went to a lower D. So here's your ABCD pattern. Now, could this one go higher? It could, but you're going to need a really strong pivot up here to get it to a higher D. And at the same time, these gaps, which act as price magnets, they will most likely pull the stock down. We had a very minor gap right here, just by pennies, filled the gap and blew right through it. It didn't reverse. But you can see back here is another gap. They tend to act as price magnets. So we are not taking any chances. You make 200% on a trade. It's time to get out and look for the next trade candidate. And there are a bunch of them. Today we published another article that I put out for Zero Hedge, which is out of character for me. Usually they go out on Mondays, but I couldn't resist letting investors know about what I believe is going to be the next major bull market. And I think this could be on par with what we're seeing in gold and silver. Here's just 4 companies that I've been tracking. We had a tremendous trade this week on USAR for our VIPs. They made a tremendous return on that. Our equity traders got into CRML. And if you're interested in getting the publications before the whole world reacts to the technicals, you're getting in first, more or less, then you could subscribe to our membership for free for 2 weeks, 15 days to be exact. And it doesn't cost you a single thing, not even a credit card. It needs to be submitted. Just come right on in. You can watch the videos. You could plug into our webinars. You could read the publications and then take it from there. Our goal is to educate the general public on how to read simple charts. Right? I talked about the gap here and how that'll act as a price magnet. But if you're in a stock and you've got 200% profit in that, and then you start to see spinning tops on lower volume, and then the oscillators start turning down, here's all you need to hit the sell button. That is it. And what we do is we put out the 7-point trading checklist to all of our members. I'll leave a link to that in the description box below. And it's just learning how to read the signals to know whether or not they're bullish or bearish. And then reading volume as a leading indicator, not as a lagging indicator. And then following up with confirmation signals down below in the CCI and the stochastic. So I hope you enjoyed this video. Please like, subscribe, comment. We love the comments, by the way. Get a lot of them. I do my best to answer or address every single one of them. So feel free to do that. And remember, we have the CryptX crew coming in. Matt and CJ just joined our team a week from today, right? So that's going to be on October 10th. You can plug into their free webinar, and they will talk about how they trade the crypto market. They're professional traders. They make money doing this, and they're teaching people how to do the same. So you have a great weekend, and we'll talk to you next time. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.